afternoon. It is our Tuesday, 3 p.m. A short presentation related to some solid concept. Today we're going to dig into 529 plan. A lot of times folks are not really familiar with 529 because it is not really bring anything immediate for a lot of parents. But let's just talk about it. But you may be confused because one of your friends goes, oh yeah, you need to put in the 529 plan and that saves you a lot of taxes. Then you look around and goes, I don't know, I don't think so, because there's nobody in my circle actually doing that. So let's just understand how 529 plan is all about, right? This is our website, folks. Before I dive into the real content, just give me 1 minute. I want to tell you about our communitycpa.com, and this is our website. Our website has these 5 functional buttons. The first 2 are for you, the potential clients that would come to our firm to work with us. On board with us is a place where you upload your information, become our client. You don't have to call us. You don't have to wait until the office is open, and you can upload at any time, then leave a message so we can come to you and establishing our relationship. Then the second button is the appointment. You can also come over here to book a video appointment with one of our partners. That way, and you get to know us, and before you commit in working with us long term, right? So this is our website. Then we also have a YouTube channel, which is really the place we do it. We call it a do-it-yourself channel, just because this is the place we tell our client that to come over and to study it first before you decide whether you need a service or you're not. Because some of those questions client has can really be done by themselves. You can do it yourself. You don't have to hire professional to do. With nowadays with AI technology, right? If you're just good at Googling, and Google search engine is pretty good. And we also have agentic AI in our firm, but we also look at Google's. I'm not making advertising for Google's, but their AI is doing very good. So you can check on things with Google's. You can also look at our webinars here, and you can type in what you want to see, like keywords. For example, 529 plan. Then all the webinars we have ever done related to 529 plan will come out for you. And I have 2 books out there, and which I wrote in 2019 and 2023. So it is 2025 now, so I have 2 more to go. Really need to hurry up. This is a disclaimer, which is to remind us that internet knowledge is internet knowledge. And when you get knowledge from internet, you really need to understand the source of the knowledge. Sometimes they can be wrong. Even if they're not wrong, but because you're coming from a different angle, that knowledge they gave you, they share with you, when you understood it based on your angle, it is wrong. So it's really, that's why professional service folks like us still exist, right? We're not replaced by AI, because AI gonna give you an answer that can very well lead you to the wrong path, because you are not really seeing the forest. You're just looking at the tree. With that said, let's do 529 plan. And in this talk, I want to tell you about 529 plan federal level, 529 plan state level, because that is a key concept. People don't get it. Sometimes you will have your friend goes, oh yeah, I buy 529 plan because I got a lot of tax deduction. And then, you know, they have kids about your kid's age, definitely not going to college yet. What do you mean by a lot of tax deduction? I don't get any tax deduction. Oh, that is because you live in Texas, but your friend lives in Iowa. See, the state will bring differences to this picture. So let's understand what's on the federal level. The 529 plan is established. It's called, the reason it's called 529 is not any other number, because that's an IRC code. It is a tax code, code 529. It's a tax advantage education saving vehicle. So you say, whoa, it says tax advantage yin, so there must be tax deduction. No, this tax advantage education saving, it is not about the time when you put money in the plan. It is talking about when the money goes in plan, whatever growing inside of the plan, that when you take it out properly by the rule, then you don't pay taxes on that gained portion. But if you are so just not lucky and your investment didn't grow, and then feels like there's no benefit, right? So the key is the money goes in, grows, if come out properly as what intended to be, not for you to buy a Mercedes, and then you can get the tax-free on the growth portion. So this IRC code is established to encourage families to save for education while receiving favorable federal tax treatment when you drew the money out. Okay? But know that all of these 529 plans are administered by the state. The funds can be generally used for eligible accredited U.S. or international institution. Just hear me out. So contributions are made with after-tax dollars. What does that mean? That means as parent, when you put money in for your kid, and that is after-tax money. So it's not tax deductions, no reduction to your taxable income. It is like a Roth IRA, right? It is after-tax money goes in, and you bet on the future growth on there. So investment earning is not taxable, tax-free, and the account owner, which is the parent, controls the account. And the beneficiary, may be changed from 1 year to another to other family members without any tax consequences. Okay? But at the state level, though, and many states offer tax deduction or credit for contributions to their own state-sponsored 529. So let's say you live in Iowa, but you are buying 529 plan that is not Iowa-sponsored. That means it is not for the Iowa University that your kid gonna go to. Maybe your kid gonna go to Harvard. Then you buy the 529 plan if it is for Harvard, not for Iowa State University. Then you cannot deduct the 529 plan on your Iowa state tax return. Those are the state-sponsored 529 plan. They give you some benefit, like reduced income tax at the state level. So in Iowa, it is very popular. Very popular. The parents will buy state-sponsored plan because it is good for them, and they can actually deduct their state taxes. Of course, Iowa governor reduced the income tax rate starting from 2025, and we are running at a 3.85%, which is a lot cheaper than what used to be. So everyone in Iowa is experiencing income tax reduction this year. With that said, I talk about Iowa just because I live in Iowa, right? So I am Iowan in many ways. I spent most of my adult life in Iowa, so I did my business in Iowa, started from Iowa, so Iowa is home. All right, 529 plan at a federal level again, and 1996 is the introduction of Section 529 into IRC code, finalized it. 2021, this is the growth of the federal level, right? 2021, under the President George Bush, and he has this Economic Growth and Tax Relief Reconciliation Act. That act had exempted the earnings from 529 plan from federal taxation when used for qualified education expenses. And this change marks a significant expansion of 529 plan benefit. So, the interest you made, the investment gain you made, and as long as you use for qualified education expenses, you're good, no taxes. So 2015, Further enhancements include allowing funds from 529 plan to cover computer technology expenses. You know, this is dot-com boom, right? It's just like all things about technology, expanding the scope of eligible cost beyond traditional tuitions and fees. Oh yeah, it has to be. Now it is covering AI, right? So 2017, this is the Tax Cut and Job Act that comes with President Trump, right? That one expanded the qualification to that 529 to K to 12. So if you go to private school between K to 12, right, the private school tuition would qualify for 529. Think about that, okay? So you can put money in there as soon as your baby is born. You start putting in 529, and then by the time the baby goes to kindergarten, you already have money in there saved and also grow and to pay for these. 529 at the state level. So this is a lot of confusion comes in. I want to make it really clear. So you understand the federal government, IRS, come up with this IRC code 529, says that if you put education saving in a place and where I approved, and all the earnings you have in there is tax-free when you take it out. And now it is expanded to K to 12. Literally, as long as your kid go to school, all the school expenses can come out of 529. Why not? You should start putting in money as soon as they're born, right? Of course, you have to have a social security number, and even if your dog goes to training school, the dog don't qualify for 529 plan. That was one of the questions I got, so I want to make clear of that. And the simple way to understand, I know when you have dog, you love them so much, it's like your kid, right? No difference, really no difference. Probably even more lenient because you know you can talk to the dog. So even if they make mistake, you go, oh what? You cannot really educate your dog. So, but dogs don't have social security number. So if you ever get into a situation where you felt strongly about a dependent, but you cannot claim them and blame it on them not having social security number, so you cannot do all of these things we're talking about here. So in this slide, I only covered the related branches. In community CPA, we have 6 different branches. So related to our branches, location, I want to give you the 529 plan understanding. So Texas, because Texas don't have individual income tax, right? So 529 plan is not a thing. No state taxes, so there's no deductions for 529. California also don't have a state income tax deduction or credit for 529 plan, although California agrees with the federal tax treatments for 529. So if you draw 529 plan money out and with a lot of earnings in there, as long as you use it according to the rule and for paying for schools and stuff, then California also would not tax you on the interest income. So that's what they mean by California conforms to the federal tax treatment of 529 plan. Iowa offers a state income tax deduction for contribution made on that year to the 529 plan beneficiary. Okay, so in Iowa, it's called the College Saving Iowa and IA Advisor 529 plan. So those are the ones you put money in and you can deduct. But if you put money in 529 plan without these labels, then they are pretty much 529 plan for Harvard. Then you actually would pay taxes on that. You don't qualify for the deduction with your Iowa taxes, but you qualify for the tax saving when you drew them out. Minnesota does not offer a state income tax deduction and credit for 529 plan, even though it is a income tax state, but they just don't have it. So in summary, only Iowa, among our branches, only Iowa offers state tax benefit for 529 and only for its own state-sponsored plan. So I mentioned that one is College Saving Iowa, the other one is Iowa Advisor, IA Advisor 529 plan. Creative, right? IADVISR. I thought it was really cute how they invented that. For 2026, folks, if you are Iowa residents and you are Iowa taxpayer, and you can deduct up to $6,100 per beneficiary. Okay, so that means if you two parents, two of you, and contribute to one kid, that would be 6,100 times 2. Amazing, right? So make sure that you know that is how much you can do in Iowa. Now, let me also explain. Now we talked about the tax implications here at the state level or at the federal level, and what is the larger benefit of 529 plan. It is normally not about the state deduction. It is more about you save in the special account. Then when your kids go to kindergarten to 12, when the kids go to college, you can use that money. Okay, but the growth of inside of the funds is tax exempt. That's the key. All right. The two type of 529 plan that established by IRS, only one is going right now. The other one is not doing that great. It's becoming more of the state-controlled, state-made plan. But 529 education saving plan contributions are invested in market-based portfolios like mutual funds, index funds, age-based allocations. So this one, like when you open up 529 plan, your financial planner actually would give you the choice. You don't have to invent the choices. They will tell you what to do. So it is pretty, it is not a self-guided, it's not a self-directed IRA kind of thing. You don't have that. It is giving options and you choose from them. The account value fluctuates with the market performance, so every year you really need to look at how your 529 plan was working. With that, let's say who can open and fund a 529 plan and how. So this slide tells you that anyone, regardless of the relationship with the beneficiary, did you hear that, can establish 529 plan for the beneficiary. You know, the person, the parent, the relative, the friends, the students, those people, the person who fund the 529 plan is the owner of the account. The owner maintains the control over the funds, okay, can change beneficiaries as they want. No income limitation apply to the owner. So let's say the mom and dad has a lot more money, wealthy, but no limitation. They can still do that. One beneficiary may have multiple 529 plan. So one person may have from grandparents, both sides, from mama, dad. So they could have 3 sets of 529 plan, right? The account owner can select investment, can authorize withdrawal, can change beneficiaries, you see? So it is pretty much a fund you have control. So folks, to put away that for someone you love, and that's a good idea. Ownership structure makes 529 plan valuable for multi-generational planning. Very key. Remember, you can change beneficiaries, so you can jump from your children to your grandchildren, from your grandchildren to your grand-grandchildren, right? So really it's you. If you live for that long, and you can change. But of course, if you don't live that long, and then the plan belongs to the beneficiary, okay, then, you know, at that time, you will make arrangement. But while you are living, you have total control. Open accounts. You can open the account with the brokerage firm like Fidelity, Robinhood, name a few, okay? And banks, U.S. banks, Wells Fargo, financial institutions, Stearns Bank, and Two Rivers, all of these banks. We have 3,800 some small, medium, privately owned banks in the United States of America. So if you happen to know someone locally, support your local small bank, okay? And you can also open the 529 directly with the state, like especially in Iowa, you want to open it up directly with the state agencies, so that way you have the state deduction. So what is the contribution rules and the limitation for 2026 I want to mention? Federal law imposes no annual contribution cap. Cap means that it doesn't really give you a how much you can contribute. The federal law doesn't give that cap. Doesn't give you a cap. Contribution, however, are limited by the state lifetime maximum balances and the federal gift tax rules. This is kind of new to you, right? I know when I say that, folks go, no, I know there's a limit. Oh yeah, there's a limit because the state imposes a lifetime maximum balance. So every state is different. And Iowa is 3,750 this year. Actually, did I put it somewhere? It's 3,700 some dollars for Iowa per beneficiary. So you could multiply that, depends on how many parents and grandparents are giving them the money, right? So the contributions are treated as a completed gifts to the beneficiary. Annual gift inclusion applies. So what is the annual gift limitation of 2026? From one parent to that beneficiary is $19,000. So 5-year election allows accelerated gifting, which means that if you look at this year, you go, I'm going to catch up on the 4 years before I didn't do it for my grandchildren. I'm going to catch up. You can do accelerated gift for 529. Donor may front load up to 5 years of annual exclusions. So annual exclusions changes, right? This year is 19,000. Last year was 18,000. So you want to just, if you are catching up, if you are, loading it up for different years, and make sure you know the annual exclusions, calculating the amount, then you can do. Then once you did that, the 5 years time, you should not be doing additional gift. That's why it is recommended that if you did a 5-year catch-up, you need to file gift tax return, okay? The contributor, the mom and dad, the grandparents should file the gift tax. Contribution limit, 529, prepaid tuition plan. So the person can be beneficiary of more than one 529 plan, right? At the same time. But please make sure that the combined contribution does not exceed the state's contribution limit and annual gift tax exemption amount. So annual gift tax exemption amount is federal. The state has a state, so you want to look at the two. So the state lifetime contribution limit typically is between $300,000 to $550,000 per beneficiary. Depends on the state. And in Iowa, it's around $400,000. It's more than $400,000. Don't remember the exact amount. So see, that is the limit for 529. The person can be a beneficiary of more than one 529. The amount you can contribute depends on the current cost of tuition, and total you can pay is capped at the cost of 4 to 5 years of tuition at a in-state public college. So what it says to you is that cap changes. So it's really a study that done behind the scene to say that, okay, what is a reasonable total cap for the college funds? So they're looking at a 4 to 5 years tuition. Of course, after 2017, the 529 was expanded into K-12. So this calculation of the cap feels like is old style. It should be using K-12 plus the college to calculate the cap, right? So just make sure that you don't exceed. If you purchase from your agent, from your brokerage account, and normally those conversations would happen, they will help you to make that. So I have one particular slide just for Iowa. See, Iowa offers state income tax deduction, right? You remember I said that. And the deduction applies per taxpayer, per beneficiary. Only contribution to college saving Iowa qualifies. The lifetime account maximum 420. Yeah. You know, I don't remember what was that, but 420 per beneficiary, strong incentive for Iowa for in-state plan. I mean, this 529 plan could also help parents to encourage kids to go to college in Iowa. Iowa has a good education, right? By reputation, and we all know Iowa offers very good public school education. Iowa State University and University of Iowa are both amazing college, right? My son graduated from University of Iowa, so I have a lot to say about that college being good. And my husband taught 20-some years at Iowa State University, so we're both Cyclones and Hawkeyes, and we never really play sport, but we don't use sport to represent which college we go for. Both are good college. 529 contribution and gift tax rules. So I just want to give you some details on here. You can contribute to one or more 529 saving plans without paying gift taxes until you hit the limit. That limit for 2025 was 18,000. 2026 is 19. In 2026, you can make contribution up to 95,000. Okay, if it is couple, it's 190,000. As long as you would not make any contribution during the 5-year period, it has a nickname. It's called the super funding. This 5-year period, it can be the past 4 years plus current year, and the only thing to consider is the state contribution limit. You just want to make sure that 190K did not exceed 420,000 in Iowa. Okay, super funding can be done multiple times. That means you can do it 3 times in Iowa, right? Limitation is once per beneficiary per rolling 5-year period. Per beneficiary, folks, okay? This allows a large tax-free gift without reducing your lifetime gift tax exemption. You know, folks wanting to keep the lifetime gift tax exemption because that can be used after you die, right? But while you are not dead, if you do within the 19,000, then you don't have any consequences. Every year, if you can maximize your gift taxes claim, then you already moved quite a bit of your things to your children. So in our practice, we see quite a bit business owners, when they have established business, they want their children to take over. If you wait until you die, then its market value is transferred to the children. You know, if you are going over a state threshold, then you sell to your children, that kind of thing. And if you want that to just transfer to children tax-free, then you want to utilize the exclusions every year to evaluate your business, come up with the share numbers, and start moving shares to your children. This is an established process for transition your business to your children. If you have any questions, you come to me, okay? And we will work a plan. But what we are saying here is that, let's say you got too much money and, you know, too much tax to pay. Why don't you just put that to be with the kids so you can establish a 529 plan, catch up, super funding it for the year, then let it earning money for your loved ones until they go to school, right? So this is, you know, this is what I said, that you want to make sure that when you do these maximized exclusion super funding, you want to file IRS form 709 to just prevent, you know, just prevent misunderstandings of your lifetime deductible amount for the gift. So make sure you actually file form 709 if you do super funding. All right, Income tax, oh, this is one thing I want to mention to you. So, I have parents ask me that question, saying that, oh, my children have 529 plan, and I have given them a lot of money in there, but when they apply for FAFSA, and that has to be, I'm afraid it will reduce their eligible supplement help from the college. So I want to make it clear that because it is under your control, you literally can move beneficiary to another person, to another beneficiary. So it's not reported under the student income. So I just want to make sure I make that point for you, so you don't consider 529 plan the way you are thinking. Income tax advantage. So of course with Iowa, you literally reduce Iowa income tax on that year when you make contribution. But for most of the state, from the Minnesota to Texas and California, there's no such a deduction, so you don't need to think of the state. But California goes with the 529 IRC requirement. So if you draw money, had a big income, big interest income on that drawed money, there's no taxes. So California has followed that, Minnesota has followed that too. So the federal side of tax benefit all shows up at the time you withdraw. All right, when beneficiary doesn't use the funds, change beneficiary, right? So save the funds for the future. That's what I want to mention to you. Non-qualified withdrawals and the penalties. Let's say you qualify, you got student 529 plan you give to your son to go to college, and instead of paying for tuition, your son bought a Mercedes using the money. So that's a non-qualified withdrawal. So with that, and the earning portion of the non-qualified withdrawal is subject to federal ordinary income tax and the 10% federal penalty. Okay, and the contribution are returned tax-free. So means that it won't charge you the contribution tax on the contribution original amount. You don't pay taxes, but it does pay. You do have to pay taxes on the earning. That 10% penalty is on the whole amount, not just on the interest. Penalty exception: scholarship, military academy attendance. So this is the exceptions for penalties. If it is a scholarship, a military academy attendance, and they don't, they would want you, they won't charge you. State tax deductions or credit may be recaptured, means that if you use it disqualified, if you do that, then if you got the state, Iowa state, the state of Iowa refunded you taxes because you contributed 529 plan, and then that maybe you have to repay that back. Okay, so it just really depends on how the system works. With technology being so advanced, a lot of time you don't even need to remember. They're gonna send you a notice for 1099 miscellaneous income, because you should not be getting that tax refund. Improper withdrawal can create unexpected tax exposure, so our advice is don't do. If you put money into 529 plan, you use it for study. Can I self-direct my kids' 529 plan? The answer is no. There is no such a thing about self-direct like IRA. So you want to make the investment choices based on the portfolio you are in, and talk to your brokerage account people, have them help you. How long can I have 529 plan? You can have it forever. And if your son don't use it, give to your grandson. If your grandson don't use it, give to your grandson, right? Transfer. And that's how 529 works. This is a new one, but I want to mention to you. In July of 2025, Secure 2.0 allow people to transfer 529 plan to Roth IRA for that beneficiary. There is amount limit. The lifetime limit is $35,000. So you can do that. So there's some details here. So requirement, 529 account open at least 15 years, right? Contribution within the last 5 years are excluded. So let's say you opened for 15 years, then the first 10 years contribution, and you can roll it over to the beneficiary. Maybe it's your son, okay, for $35,000 as Roth IRA for your son. All right, so just make sure that of course, once you roll over to Roth IRA to your son, what's the difference? The difference is you no longer have control. It's your son's money, okay? And this is the exit strategy for overfunded 529 plan. IRS has not yet issued the final operating guidance at the time when I work on this slides, but it could have came out. It could have came out, or pretty soon. So, but generally speaking, you have that option. Okay, you want to make sure that you talk to your financial institution for 2026 because this is coming up. Common planning mistakes, overfunding is one. But of course, the overfunding had a little bit of way out with the Roth IRA, right? And ignore the state recapture rules. Just make sure that you look at the state tax rules and the poor coordination with scholarship. Sometimes, you have the 529 plan, you also have the scholarship, and then you just didn't really have an opportunity to even utilize your 529 plan. If that is the case, then you have other options like changing beneficiaries and working with the school to coordinate the scholarship. Maybe the scholarship is based on the 529 plan, coordinated with 529 plan. If that's the case, then you work with the school on that. Using withdrawals for non-qualified expenses. So don't do that. Don't buy a Mercedes with your college 529 plan money, and not reviewing your investment option can be also a problem. So make sure you do care about that because it's literally a cross-generation vehicle for you. Key takeaway, 529 plan remain one of the most powerful education planning tools. Now added with Roth IRA is a wealth preserving tools. And with over-generation possibilities, changing beneficiary is also a great estate planning tools, right? And state rules varies, so make sure that you know your state rules. Google is so amazing. You just look for 529 plan specific rules for Montana if you live there, right? So make sure that you check on that. Of course, the Secure 2.0 add a new flexibility. You can move that to your beneficiaries Roth IRA. That's I like that because my youngest graduated about a year year and a half ago. So at that time, I remember to try to plan the 529 to be used up. Otherwise, what are we gonna do? No more kid, right? So so we actually did plan that to use it up. Otherwise, if I knew if Secure 2.0 is available at that time, I would not worry because I could just roll that over to Roth IRA for the kid. Obviously, our 529 plan was in the account for more than 20 years, so we qualify for that 15 years gap they're talking about. And a generation wealth transfer via education, yes. And the purpose of education, give a strong hold on education, but generational wealth transfer. And annual review with tax professional is essential. So I would say that 529 plan now becoming a little more clear picture for you. Am I right? And I'm so glad you are here listening to me. And my last slide to show you on our website. If you go to communitycpa.com and you will have this button called appointment. You click and you can book appointment with any one of us. And these are 6 partners we have in our firm, and we are equally knowledgeable in terms of the general knowledges that we could offer, and each one of us has our specialty as well, and you can always book my time if you want a free discussion and without worried about what you pay, how much you pay. And then we have one partner right here. His name is Dan Kim. He offers a 30 minutes free session where he will at least give you a capability study of our firm surrounding your special situation to see whether we're the best fit for you. So I hope that you take advantage of that. Other than that, I think I'm good with today. Today's webinar is done in Houston, Texas, our one of our branch here in Houston. I will see you again on Saturday. All right. Bye-bye.